Hello everyone, I hope you guys are having a wonderful day, making some really good trades as per usual. Let's dive in back into the charts here. So right now USD/JPY continues to grind higher. It's getting very choppy. We're looking for one last impulse here, and I think once we reach 156 to 159, this is where the market could be at risk of some sort of big black swan event or big turning point. Obviously we would have to hold underneath this pivot, or else we're going to continue to extend higher. And previously we've seen when the yen gets into some sort of strengthening mode, and you see the dollar weakness, then we see USD/JPY kind of go pretty crazy, right? And now I still think we're in some sort of connector. And if it does come to an end here, maybe we'll start to see panic come back in the indices, and we're kind of losing momentum here, chopping about. We're trying to hold this 50-day moving average, I believe, and then the 100s here and the 200s all the way down at 22,000 on the NASDAQ, right? Taking a look at the Dow Jones now, let's move on. Let's see here. So right now, Dow Jones looking a little bit rough. I don't like the structure as much now. Now we do have an impulse. It could still be a 1-2, but we came up pretty fast with no divergence, and we came crashing down. So either this is a flat and you're coming down to here, back down to 460 or 46,000, and you're going to try to hold this pivot. If this breaks and you start to break the lows at 45,000, you're opening the doors and the possibilities of the fifth wave being done, and this cycle could be ended, right? And this is a big it's going to be some sort of crash, right? A mini crash, and we'll have to see what's going to happen afterwards, but could be a big buy the dip opportunity, but we'll have to see. I think we're seeing rotation happening in the market. You're seeing some days the Dow Jones is pumping super hard and the NASDAQ is red, right? So you're seeing people exiting their positions out of tech and getting into some safer stocks, but overall it's a pretty dangerous time. So it's not time to go gung-ho, balls to the walls kind of thing. It's pretty you're trying to be a little bit nimble. And in full disclosure, right, to share maybe some of my positions, I am already short the Dow Jones. I'm short. We are short the Dow Jones, and we are long volatility as a hedge. I still have long positions, but I am hedged at the moment. Taking a look at the SPY, we ended up getting a good reaction from our box here, so this was a successful trade outcome. And right now, just looking at the way the market is trading, not liking it too much on the SPY either. Big retrace. This could easily impulse next week and come back out. If you break the lows, then I'm sorry to say, but this thing may go much lower than we think, right? It's going to start doing three-wave corrections, and you'll have finished the impulse on this some sort of very small fifth wave, right? And then if that happens, then you're opening the door for lower prices. And if it's lower prices, and it's going to move in threes, it'll be some sort of ABC. Your first target is down here at 565. If that doesn't hold, and this was a flat, and the fifth wave ended somewhere here, and this whole thing is a flat, you got to look lower, guys. And it's not time to be buying. The time to be buying was in April. And the reason I'm saying all of this is because these weekly cycles, I forgot to cover the weekly cycles, but they're coming to an end. If you look at the weekly cycles, you're starting to break them. Even on a daily, You're starting to break them. You start to break them here. Here was the break of the trend. And then you got a lot of, you're opening the door to go down. Alright, this is a daily cycle. The weekly needs to correct down. It's been extended. We have an impulse. We have divergence. We have an impulse. You can make the case that this is a 1, right? This is why it's still bullish. It's not the end of the world. We're going to get a nasty correction. It's very possible we're going to get a very nasty correction, and this maybe this gap fills, right? There's gaps down below that we've never filled. We left a lot of open gaps, and maybe this is what's going to happen. What's going to do that? I don't know. Couldn't tell you. But right now, it's time to be cautious. It's not time to look for another impulse higher. I think that time is passing us, and we gotta be careful, a little bit more careful. Like the Dow Jones could do this, right? But it's unlikely that it does this if the SPY does this, right? If the SPY starts to correct down, it does a series of double corrections. Then you gotta be careful. You gotta be careful. I think if the RSI dips down, if the price dips down, and you start to erase divergence, then there you go. You're opening the door for a much bigger correction down. Are we gonna bounce on the first leg down? Yeah, for sure. Is this gonna be the low? Could be. Could be a shallow 2, right? And you don't get this WXY, a bigger correction. But just looking how long we've going up, I think either we get a really nasty downwards, sell off, or we get a more extended one, and it kind of match. It doesn't go maybe as low, but it's probably grinds sideways for a while. We're correcting the daily since April. We've been going up since April. All right. Now tech, the big question in tech, right? We're starting to see some really big dark pool prints come in, right? They've just been coming in this week, last week. They've been coming in for almost a whole month now, the last 30 days. And it's something that institutions will start doing, getting out of big leverage funds, de-risking, getting out of their longs before the market starts to cycle towards the downside. Now, we don't initiate trades or change our analysis off of one print, but a series of prints. And when I say a series of prints, let me just post this here. I'll just open this up, share it with you guys. Tesla bull, right? Big tech stock, massive prints at the highs. We're just chopping sideways. It's clear they're clearly not getting long here. They got long down here at $12. They almost doubled their winnings. They're getting out. Number 1 trade at the lows. Number 4, number 2, number 8, number 7 at the lows. Okay, what's coming here? Number 6, number 3. So, and a series of other ones, right? The phantom prints, the open market prints, and they're getting out. Okay, that's not a good sign. If we were supposed to continue to pump higher, that's not a good sign. PSQ, ProShares short, not ultra short. QQQ. So I'm guessing this is a 1 time or 2 times leverage ETF. Number 5, let me give you an example. This one came here at January 10th, 2024, before the Japan crisis. Number 3, didn't really do anything. Number 4, longs exit, new shorts for a brief spike, I guess, and I guess they shorted the PSQ because they just started bleeding. This was tariffs. And number 1 today, or Friday at the close came in. The number 1 trade since inception on the PSQ. So these are big positions being opened. So someone is getting short the QQQ. SMH, VanEck, basically semis, right? Big cluster of dark pool prints, positions at the highs being exited. Not a good sign. And price action will tell you if it's a good sign or not. If we saw a big cluster and price is just surging, yeah, they were buys. But we're seeing a big cluster, price surge for a bit and it's coming right back down. So maybe there was a slight overshoot and price is coming back down. If we start to go below You know, 325 on the SMH, which we're going to dive into. Not a good sign. This is opening the door that buyers have gotten out. Big players have gotten out. It's just retail holding the bags here on the semis. JP Morgan Chase, just a single stock analysis. You see number 3, number 7 at the highs back in September. Big decline. Number 25 at the highs, big sell-off. I'm guessing this is earnings. I'm not too sure, but big sell-off. Number 7 on the dark pools for UPRO. Pro shares, Ultra Pro, long the S&P 500. This is them getting out. Slight overshoot. Price starts to decline. This is number 7. Number 4 came here at 118. What has the S&P done after? We got a pretty nasty sell-off after, didn't we? FANG. This is microsectors, or actually, I'm pretty sure this is part of either NVIDIA or some big cap tech longs, but it's just microsector, so I'm not too sure. But the number 1 came at the highs here, 3 times leverage. This is a tech ETF. Not a good sign. Another one. Oh no, sorry, this is the same one. Let's take a look at our part 2. This is just going back to Tesla. There we go. VONG. Right? Vanguard funds Russell 1000 growth ETF. So growth. Wow. Number 1 and number 2 at the highs. IWM's in danger too. So not a good sign either. And if you're thinking that they're getting long here, why wouldn't he get long down here? Oracle. Number 2 right at the highs. Someone got out. Someone's getting out. Well, the getting's good. XOXL, 3 times leverage semis. This is a little bit more of a short-term analysis. You could see when the big the big guys get out and price starts to just decline right after. It's a pretty big warning sign. Irene, big cluster, 1, 2, and 3, all at the highs. What does this tell you? There's these single stocks, that ones that are giving you hopes and dreams that you're going to be a billionaire or a millionaire. It's just going to keep going up, and it's going to be a great buy in the next dip. I highly doubt that. This thing is probably going to come crashing down, going back to the mean, all right? Maybe $10 or $20. It's going to lose the majority of its gains probably. Someone's getting out. There's going to be no buyers to support this when it starts going on the wrong direction. Pro shares, Ultra Pro, S&P, number 5 and number 4 right at the highs. This is a little bit larger time frame. Number 3 at the lows in April. Number 5 and number 4 at the highs. I think we had UPRO, was it here? Yeah, on the smaller time frame. So you can see number 4 right there. Where were we? I think the last one here is just IVV, iShares for the core S&P. And we saw number 1 right at here when the trend was shifting bullish. They got in. Number 2 came right at the highs. Number 5 right there. So again, taking some profits, I'm assuming. And number 2, as you know, as kind of matching number 1. I'm pretty sure when I was checking at the volume. But yeah, not a good sign either. So that's what you're fighting against right now. That's what we're fighting against if we're gonna stay long the indices. So it's super high leverage. That's why you gotta, if you are determined to stay long, and I'm still long, I'm gonna start hedging. You gotta start putting your hedges up to protect some of your gains that you've made. Or else if you stay long this entire market, you know, just buying every dip, you may be buying the dips for a while, right? For months maybe. IWM broke the daily cycle a while ago. The weekly cycle is now coming to an end. Yeah, so it's not looking good either. This could be due for a much bigger pullback, and we're starting to see that. It could be moving in 3s. It's a little bit tougher chart to analyze, but let's just say for simplicity's sake, yeah. There you go. Just one-to-one extension. Anybody can do this. You don't need to be a genius. ABC, right? And you could get a big low, big bounce, and another low again. It can keep doing this until the cycle's fully corrected. And if you take out this low, then this one would probably be the entire one. But I'm guessing that IWM may hold these levels here. TLT is starting to reverse down from our short area. So if this is starting to break the lows too, right? We're starting to see the lows break here, which is a pretty big sign that this thing could be starting its extension lower. So you have an impulse down, a 1, 2, and now you're seeing a 3, 4, and a 5. Okay, we still haven't seen the 3 of 3, but maybe this is the catalyst in the market that's going to drive everything lower. If yields start to surge, why would yields surge? Long-term yields. I don't know. I couldn't tell you, but we're starting to see that right now. You look at the 20-year yields. We are in this reversal box, right? I was hoping that we could break down and go straight down to 2%, but it doesn't seem like it wants to do that. We've seen an impulse down. Maybe we're going to get a B and then another C, but could easily be done here. And, you know, we're going to go up. We're just going to see an impulse higher in the yields. Are we breaking the weekly cycle? Not yet. We're on the verge of breaking the weekly cycle towards the upside. If that happens, then yields are going to start surging. And maybe that's the reason the market's going to start tanking. Long-term yields are suddenly spiking again. Government reopens, all the data comes out, and it's garbage. The SMH, I think we said this was a B. Kind of just waiting for that capitulation moment. And since this is a flat, this could go much lower than this target area. This is just under normal market conditions. Yeah, flats can work quite nicely, but in panic modes, flats are essentially impulses down with a B high, and they can go much lower. This could be gearing up for something like this, where it's a 1, 2, and another 1, 2, and it's just forming 1, 2s, and it's gearing up for that wave 3 to the downside. Am I wrong? And the lows are in? I could always be wrong. But take a look at the just do like a bit of a size comparison, and take a look at like, oh, is this correction enough to correct this entire cycle? Probably not. Probably not, right? You probably want a matching correction due to the size of the rally, something like this, to wipe out a lot of the people who are longing at the wrong times. Gold, right? You're probably going to get some sort of matching correction here. We had an overshoot. This would be a failed short setup, although I think it's still going to work if we start to see an impulse down, and then gold is going to go down to this target area. And actually, we're going to have to adjust this because we actually rallied a little bit higher. There you go. So Goldman doesn't have to go as low. And gold, I think gold can hold like 3,700 to 3,400, right? That's pretty good. If that's the case, if this thing's just going to flash crash down, then that's your target. Take a look at silver, which is next. You have the same situation where this would have been a failed short. If you're trying to short silver and it's just so volatile and aggressive right now, it's pretty hard to short silver. All right, it's back. Went back to 54. Now it's back to 50. It's very bullish long term, but it could be going. It's kind of all over the place. There you go. Let's take a look at excuse me. Let's take a look at pretty sure oil is next. Oil, yeah. Let's take a look. Oil. So oil is complicated here. Could still be in this B, and if that's the case, then we have to adjust our target for lower. But we're essentially looking for this B wave to finish so we can get another crash down. So maybe early on next week we could see oil spike and then reverse within the same week, and then we're gonna get this final leg down and push down oil. But when is it gonna happen? I don't know. Let's see here. Nat gas. So Nat gas is not Nasdaq. Nat gas hit our short area. I don't know if this one's gonna work. I gotta check. I will have to check the dark pools to see maybe KOLD or Boyle The leverage ETFs, are we seeing any prints? If we're starting to see prints, yes, maybe this could be the time to short nat gas. But we shorted nat gas here, got stopped out. We shorted nat gas here and then got stopped out. Shorted nat gas here, got stopped out. This thing just wants to go higher. So it's been trying to go higher, which means this was some sort of ABC, and now it's got to make its decision if the lows are in, right, and it's time to do a breakout long, or should we wait? And then finally, let's wrap it up with the DXY. This one I added this week. So the DXY, I think the dollar is probably going to go higher and into this area here, which is not the greatest for people who want cheap dollar and stuff like that, like for your Bitcoin and gold to go higher. And that might be why we're going to see maybe a dump in silver and gold, as the dollar is going to strengthen a bit more, chop around, and then we'll see another crash down lower in the dollar, and then they can start running again. Bitcoin can start running. But until then, nothing's happening just yet, and I think USD/JPY needs to go up into this area. Okay, so maybe USD/JPY can go up into here. The dollar can rise as well. Dollar strength, yen weakness until this area, and then this is where you want to take even more care of your portfolio than you already have, right? And that's it. Have a wonderful day.